Good morning, everyone. Welcome back to Capital Markets Quickie. I'm your host, Endrit Cela. As we wrap up another interesting week in the markets, we're taking a lighthearted turn today because it's Fun Friday, folks. We're taking a look at those oops moments, the 5 typical mistakes that investors, whether they're Wall Street pros or Main Street beginners, often make. And guys, don't feel bad. We've all been there, so let's dive right in. First up is the classic overconfidence trap. Ever had that moment where you think you've cracked the code of the stock market and absolutely nothing can go wrong? Yep, that's the one. Remember guys, even Warren Buffett, the legendary investor, makes mistakes. It's important to stay humble, always learn, and don't let those early wins get to your head. And next, we have the emotional roller coaster. Markets dip and you panic, markets rise and you're on top of the world. Riding this roller coaster can lead to some, stomach-churning decisions. A tip from me, enjoy real roller coasters, but try to keep those emotions in check when it comes to investing. All right, moving on. You ever find a sneaky subscription charge on your bank statement and think, when did I sign up for that? Well, the investing world has its own version. Those subtle fees and charges, always be aware of costs because, they can nibble away at your profits before you even notice. Okay, now we're moving on to a fun one, the one-trick pony. You might have heard of it, especially when you find that one stock or sector you love, absolutely love, and suddenly it's all in, all chips on the table. Let's talk about diversification because it's like a buffet, folks. Get a little bit of everything on your plate because you don't want to miss out on a potential gem while you're laser focused on just that one sector, on that one stock. And last but certainly not least, we have the infamous rear view mirror investors. I think there's a little bit of that in every single one of us. I'm sure you've never tried this, but would you ever try driving by looking in the rear view mirror? It's not a good idea and you definitely shouldn't do it. The same goes for investing. Investing based on past performance. Now, it's good to have a track record, but just because a stock did good last year, it doesn't mean that it's going to be a good stock this year as well. You should look at the fundamentals. You should look at valuation. And, come to think of it, I'm going to make a whole episode about the 5 fundamentals that you should look at when investing. So let's get back to the topic. Keep your eyes on the road and definitely on the horizon. And there we have it, a quick, fun rundown of those investor oopsies we all make. As we head into the weekend, let's take a moment to laugh at our mistakes, learn from them, and promise to make new entirely different mistakes next week. Okay, jokes aside, guys, thanks for joining me on this Fun Friday edition of Capital Markets Quickie. Enjoy your weekend and happy investing. Cheerio.